Welcome back to Portfolio, everyone. And in today's video, we are going over the newest electric vehicle IPO coming to the market, Xpeng Motors. This is another Chinese electric vehicle company. Similar to NIO, they operate within the Chinese market, and they are called to be Tesla's newest rivals. Of course, Tesla is very operational, has been delivering tens of thousands of vehicles each and every quarter, so it'll be very interesting to see if this company can even come close to matching where Tesla is today. But we are going to take a look at their upcoming IPO. Xpeng Motors is the newest EV company that's going to be on the market, and of course, the entire EV sector has been on an insane rise over the past couple of months. So in today's video, we're just going to talk about some key highlights of their IPO, go over the products they're operating in the Chinese market, and just determine if we believe they have the financial backing to actually succeed and continue on operating very nicely. And we're actually going to go over the other EV companies in the sector like Tesla, NIO, and Workhorse, just to determine if we like those companies more than Xpeng Motors. So we'll jump right in. So this is a Chinese electric vehicle startup that's actually going for its IPO on the New York Stock Exchange. This company already has a lot of investments from some other major brands across the world. They've actually received already a $400 million investment from Alibaba, one of the largest companies in the world, and they currently operate and sell two different vehicles. They have the G3 SUV and the P7 sedan. And later on, we're going to go to their website and actually take a look at these vehicles and look at some of the features. So they are filing for their New York Stock Exchange IPO. They're going to be offering Class A and Class B shares, and they're actually planning to bring in $100 million from their IPO, but this could likely change, and it may go up in value. So this is a company that's IPOing to generate some cash in order to maintain operations, grow the business, and actually get their production line up operational to the level they would like to be at. So they've already got some major investments, of course, from Alibaba, but they also have some other big shareholders like the Qatar Investment Authority, so they have some big names backing this company. So they're pushing for their IPO even though there is some trade tension with China right now, but of course we don't talk politics, so we're just going to ignore that for now. Moving on, of course, in China there are a lot of other electric vehicle companies, and of course Tesla is planning to go global very soon, and they actually opened up their Shanghai facility, so it's going to be very interesting to see if this company can compete with the already, companies in the market that are actually producing and selling a lot of vehicles right now, such as NIO, one of the largest Chinese electric vehicles manufacturers. So we're going to talk about later on about NIO to see if they can compete with NIO or if NIO is going to dominate the Chinese market. But let's keep on going. So they are already distributing vehicles. So the G3 production began in November 2018. And as of July 31st, 2020, they have delivered 18,000 vehicles of the G3. And their other vehicle, the P7, started to roll out to customers in May of this year. And as of July 31st, so in the first couple of months, they delivered just under 2,000. So total deliveries just over 20,000 for all their vehicles, compared to Tesla, of course, one of the market leaders who delivered close to 100,000 last quarter. And this company has only delivered 20,000 vehicles in their entire lifetime. So of course you have to put that into perspective. This is still a very young startup company, nowhere near where the market leader Tesla is today. So even though people are saying this might be Tesla's rival, Tesla is way beyond their operations right now. So they are planning to launch a third vehicle coming out in 2021, and it will be a vehicle, and it's going to be a sedan. So of course there's a lot of news coming with this company, and when you invest in these young IPOs, there is a lot of financial risks. And we're going to take a look at this other article that goes over the financial statements, and we're going to take a look at if we like where this company is going and if they have been performing nicely as where they are today. So of course we know the entire electric vehicle market is growing rapidly, and each and every year there's a higher demand for these types of vehicles being on the market. And as that demand in China, society shifts towards an electric vehicle society, this company of course is going to have a greater market to sell its vehicles to, and so will all the other companies. So like I mentioned, they plan on raising $100 million in their IPO. And of course, they are manufacturing, delivering vehicles just in China, but their prices are ranging from $22,000 to $45,000. So within the average car value, they're not a premium car by any means. And of course, they have some strong management. Their CEO actually was the chairman of Alibaba Games, so he has experience running a very large, massive company. So of course, we talked about their G3 SUV electric vehicle, and they also have a P7 four-door sedan. So they've already received around $1.6 billion from investors, and this is a company that still seeks a little more funding to continue to grow and actually get to the point where they need to be. And they are operating within one of the most populated countries in the world. So in 2018, the electric vehicle market in China was valued at $74 billion. But of course, in 2024, that value is supposed to go up to $330 billion. So that actually represents a 28% annual growth in demand and market size for electric vehicles only within the country of China alone, which is absolutely incredible. So of course, and the more environmentally friendly we get as a society, the more likely that this trend will continue. But one thing we have to notice that Xpeng Motors does have a lot of competition. There's numerous Chinese electric vehicle companies and even Tesla, an American electric vehicle company, operating within China right now. So there is a lot of competition for this company. And of course, taking a look at the financials, this is a young company. They are nowhere near profitable just yet. Let's take a look at how they've been doing from their last revenue statement. So from the year end 2019, you can see here that they actually lost $522 million US. This column right here is in US dollars. So you see they brought in $328 million in US revenue, but they lost $522 million. So huge net losses for the company, nowhere near profitability just yet, but of course, this is very similar to all the other electric vehicle companies on the market. Taking a look at the 6 months ended June 30th, so the 6 months of 2020 so far, they've brought in $141 million of revenue and have still posted a net loss in the first 6 months of $112 million US. So still burning through a lot of capital right now. And with regard to their balance sheet, they have around $300 million in cash on hand with total liabilities of $886 million. Their free cash flow was actually negative during the 12 months ended June 30th, 2020, and they were down in the red $582.5 million, and that is in US. So a lot of cash flow being used to run this business right now, but of course, nothing too crazy, and that is to be expected from all of these young EV companies. Let's take a look at their website and just look at the vehicles. So this is the G3 super long range smart SUV, very sleek design, similar to a lot of other electric vehicle stocks on the market. And of course, it does look somewhat similar to Tesla's vehicles. Very sleek design, modern looking, very minimalistic. So very interesting to see their new design. If we take a look at their sedan, the P7, very sleek, kind of luxury looking sedan, 4-door, very interesting design for this car, but nothing too unique. It's very similar looking to the average sedan you see on the road today. Moving on, so now we took a look at their IPO. Personally, I will not be investing in this company, just not right for me. I don't like these young EV stocks. I'm not that type of risk taker, and I kind of stay away from these young companies before they're profitable. But now we're going to take a look at these other EV companies in the market. The other ones have been around for a little bit longer. They're actually producing vehicles and selling them each and every quarter, and they actually have some real financial results to take a look at. So the first one, of course, is Tesla, which went up 11% on the one-day chart, which is absolutely incredible. The share shot up today, and it's remarkable to see how fast this Tesla company grows. They did announce a stock split last week, so it'll be very interesting to see how the company performs post-split. Of course, the stock split doesn't change the company's fundamentals, but we'll see if young investors have enough money to actually move the share price of the company. On the one-year chart, this company's up 651%, which is absolutely incredible. 12 months ago, you could have bought a share of Tesla for around $200. Now they're up to $1,800 a share, which is almost crazy to even think about. Their last earnings report, they beat expectations by $631 million, and they beat earnings per share by $2.34, which is absolutely incredible, and they brought in over $6 billion in revenue. So this company has been performing very nicely. They continue to grow. They continue to innovate. I look forward to their newest Cybertruck that's going to be coming out next year. And I really do think that's going to be a game changer for the company. I really do think it's going to open up a large subset of the market to them. And I think this will help the company only succeed past where it is today. Moving on, another direct competitor to Xpeng Motors, and the Chinese manufacturer that's actually very big to American investors right now. It is ticker symbol NIO. The stock again has been on an insane surge on the past 12 months, up 351%, which is even crazy to think about. $3 a share 12 months ago, up to $14 a share. This company has been on a surge, and it has been delivering a decent amount of vehicles each and every quarter. So this company operates within China as well. They have plans to expand outside of their home country within the next couple of years. And this is a company that actually does have fundamentals and actually has proven revenue and a decent sized balance sheet because they're actually delivering vehicles to customers each and every day. NIO beat earnings once again. You can see they're beat by $33 million on their last earnings report. They brought in over $500 million in revenue, and they beat by 9 cents per share. They are still not profitable yet. They still posted a net loss per share of 17 cents, but that is 9 cents better than analysts were expecting, and they actually beat on revenue by around $33 million, which is good to see that this company has been beating analyst expectations. The last EV company we have to take a look at is another American one. It is Workhorse. This company does not operate and sell, consumer vehicles. They focus on delivery vans, and electric delivery vans actually have drones, and they're specializing in the last mile delivery. So they focus on taking packages from warehouses to consumers' front door and delivering final goods. Their share price, again, similar trend to these other companies, up 353% on the past 12 months. Once again, crazy to even think about those crazy gains. If you were holding this company 12 months ago at $3 a share, your current share price is up to $15 a share. Absolutely incredible to even think about. They missed analyst expectations by a very slim amount, missed by less than $1 million on their last report. By $180,000, they missed expectations, and they only brought in $91,000 in revenue. So nothing too crazy with this company. This is the smallest compared to NIO and Tesla, but just have to point out a couple different EV companies that actually have results. They're starting to deliver vehicles to consumers, and they're working towards getting contracts for bigger delivery and orders. So of course, this was our quick little analysis on Xpeng Motors, the company, the Chinese electric vehicle company that is going to IPO on the New York Stock Exchange very soon. Very interesting to see another company competing in this very competitive EV market, and we'll do updates when this company goes IPO to determine if we will be buying once the shares go public and how we value the company moving forward. So thank you for watching, everyone. I'll see you in tomorrow's video.